Hey guys, it's Will. I thought I would go through the markets as usual. As you know, I've been talking about a negative market for quite some time. If you've looked at my videos, today is going to be some inflation data. So if you go to CNBC, consumer price inflation in May expected to run sizzling hot as energy, food, and rent rose. It's always tricky to anticipate what's going to happen with the markets and what the news is going to be and how the market's going to react to the news. And if they react a certain way initially, it'll change later in the day or on Monday. So, but it's important sometimes to know what is coming, a major event, because if you were looking at buying stocks this week, you might have got into the market, but didn't realize what was going to happen that could have negatively affected. It's kind of like stock. It's kind of like earnings for a stock. If a stock has good earnings, but they have some negative comments in their earnings report, in some fashion, it can really negatively affect it. Or if people sell off after good news, there's all sorts of scenarios where you don't really know what's going to happen. So, but if we look at the markets, if you see the Dow Jones, it had bounced off this channel and then it was coming up and flat right underneath the 50. So you could say that, once you get up to that point, you have to wait and see if it's going to get through the 50, and you can see it turning down. But it's going to depend, if there's some major improvement on inflation or something, which, it could happen, but oil's up quite a bit. Interest rates are going up. Food prices are going up. So, but they're looking for that peak, and, So anyway, what I do, I showed you the channel, also a little bit longer duration, weekly. You can see there's these little bear market rallies, if you want to call it that, little relief rallies that come up and bounce off the 50. A lot of small little dojis on the weekly. This one here, this week, get a doji and then a down candle near the 8 EMA. So anyway, that's not good for red volatility stops, so we're kind of turning back down. It could be another lower high potentially, or it could stay in this channel. We'll see what happens. NASDAQ is the one that it's down a lot, but it's kind of vulnerable to interest rates and things like that. People thought it's been sold off so much that, they were definitely buying these dips. It started to come up, nice little, it'd be tempting to get in, but you can see how it sort of flattened out. And then this candle kind of bounced right off the 50 and turned back down, reversed. So, again, if we look at the weekly, sometimes you come back up, get around the 8 EMA, and then it could be another downtrend. You're still in a downturn of the momentum. And then we have the S&P 500, a little downturn on the momentum there on the daily, but in a channel, kind of turning back down now after it kind of got close to the 50. Similar, they're all kind of similar. IWM, similar once again, got up to the 50. Turning, kind of curling back down. We'll see what happens if this is a new turnaround for a downtrend. So on the weekly, sometimes you get these little reversals up to the T line and then back down. So they're a good spot to short, like right at that spot where you see it bouncing down. We came back up here, got right up to this channel and then down. So that would have been a good spot. This might be another one where we didn't quite get up to the top of the channel, but it's turning down here with the momentum kind of down. So the only thing that's really been good is energy and commodities, that type of thing. And so there's little little bounces here and there for short-term durations, but um, like I've got these charts that show above daily, weekly, and monthly volatility stops. So if they're above all three, they're in a big uptrend. And so like coffee, you can see how it pulls back and then bounces up. So right at that spot where, if it breaks through there, or it could pull back to this trend line here, and then you can look for a bounce off of that. But I sometimes like to sort by weekly. So the way you can do this is you look at the volatility stop, you add that to your chart. And so I've got 20, 1.25 as the values. But if you click on it, you go create condition. And then what you do is you say, instead of greater than 0, you want the volatility stop to be, the price history to be above the volatility stop. And then you can put a name up here and you can save it as a condition. And then on the column, when you add a column here, if I click on this button, instead of a value, I say condition. Then you can look for conditions. And these are checkboxes instead of values. So if you want to get TC2000, that's what I'm using here. It's very powerful. Check out the link in the description below. You can get a free trial or a $25 off your purchase of your subscription for this. And you can see UGA is gasoline, incredible uptrend. You have soybeans, commodities, stuff like that. GSG is one that's general index, not for a specific commodity. Some have pulled back a bit. Wheat. Oh, sorry, that's not a one. Wheat. So they had this. It was flat here, a bit of a spike, and then a pullback. But there is some support at the. We'll see what happens because on one hand you have the inflation. On the other hand, you have slowdown in the economy, which reduces consumption because of that. But obviously, people still need to eat. Eventually, they won't be driving if they're unemployed, and that they won't be driving, or they'll cut back on vacations and stuff like that. Most of the money will be spent on food and housing, so it could affect things. But sometimes, to some extent, there's not a lot you can do, about food and stuff like that. So the in the States, you have this FCG, it's a natural gas index that's been going up gangbusters for quite some time. It's fairly extended, and oil is too to some extent, but those are the big ones to look at, natural gas, energy. So what I also can do is sort by 90-day performance, which gives you the a little bit longer term, strongest stocks or ETFs. OIH, JJN was strong for a little while, but then it pulled back. But you look for a resurgence of those at some point. Oil, XOP is exploration. OIH is oil service. If we go 30 days, we get more recent, which gives you the Chinese, the K-Web internet. So look for that to kind of potentially spike. It's hard to say exactly because they're coming out of lockdowns, but there are some, and you have to see. Solar energy kind of spiked. I can see from here to here, but now we hit the 200. So once you're extended in this uptrend, it's not a great time necessarily to get in unless you wait for like a pullback and you have a recent low to use as a stop somewhere just below that. So I mean, these aren't major pullbacks, a little bit here, a little bit there, but still in that uptrend. So we'll see what happens right here. But if you do get a decent pullback, it could be a good time to get in, but with inflation right now and the interest rates kind of at that level, like the if we go to the trading view, I've got this oops, let me just sort this. I've got one thing on here that I look at, which is the 10-year. It's right at 3.03%, which is kind of like a critical point. It kind of reached there, pulled back quite a bit, kind of getting close up again. So it's kind of a turning point if it breaks through there. And it goes back a ways too, but if it kind of keeps going up, or if it pulls back, and goes down. There's different funds you can look at. One that I look at in this, instead of going into trading view, TBF, sort of the 20-year. It's not the 10-year, but it's a 20-year. It's a short, so it's kind of mimics the interest of the 20-year. Anyhow, as I mentioned, the inflation today that comes out is going to be important, and then wait to see what happens with the reaction today and then Monday, stuff like that, to see if things are going to be increasing inflation or flat, or if it's going to start going back down. People are going to think that maybe we've peaked. So yesterday there was quite a drop in the markets. If I turn on the pre-market, it's pretty flat right now. It's only 6:30 in the morning in the Eastern time, so not much is happening at this point. But hopefully that helps. And like I said, you got to be careful. We're at a point where if things do kind of look bad with the inflation, we're kind of at that point where, especially where we're starting another down leg potentially off of this 8 EMA. And, even on the daily chart, you can see that. So that might be a good chance for you to do inverses. And that's where, if you're doing ETFs, you can do inverse funds. There's extreme ones, like kind of in terms of price changes, is SOGU for the SPAC, and then you've got SARC for the ARC funds inverses. So we're just supporting at the 50 now, and this is the inverse. So it could be another leg down in terms of the ARC funds. Crypto is right at this kind of crucial point for quite some time, but it is at support. So if it breaks through here, it could have another down leg in Bitcoin as well. It depends on what happens with the markets. And of course, you've got DOG for the Dow, which is turning around, so it's starting to pop. RWM is the inverse IWM, and PSQ is the NASDAQ, just a single one-to-one. And then there's ones that are more leveraged. So I hope that helps, and we'll chat in the next video. If you want to get TC2000, don't forget to check out the link in the description below. And you can get $25 off or a free trial as well to check it out and see what you think. Talk to you guys later.